Trade Genius.
Hey guys, welcome back to another episode of the Trade Genius podcast. I'm Philip and joined as always with Bob Kudla. And so today the market, huge explosive move, right? Bob, just massive down, massive up, and came off the heels of that CPI reading. So Bob, before we jump into the charts and kind of explain why we saw levels and the charts play out kind of how we thought they would, what was your take on our CPI number today?
Yeah, so the CPI report came in 1/10 over forecast, which is basically a rounding error. PPI came in 1/10 over two, and then the employment report came in on last Friday a little bit over as well, and that got us thinking, and the liquidity was starting to push up. That we smelled a reversal. I don't know if I thought it was going to be this violent, but we're happy that it was. And so now, we're going to show you some charts a little bit later in the show here, why we think the narrative is going to change on the inflation front. And it's going to change the way and the manner in which the Fed's going to be interacting with the markets.
Yeah, and so if we look at today, or not today, but this week up to this point, we had the PPI, right? And then we had the Fed minutes. Those were all yesterday. And then we had the CPI today. And I mean, the market did a really good job of absorbing all of that volatility. And here we are higher. So I think what we'll do is we'll jump into the charts real quick, and then we'll get into more of the nuts and bolts on the CPI and the longer term macro stuff. So let's jump into the first chart here. And what we're going to do is take a look at, this is a chart we've shown you guys a few times already, but this is the liquidity chart, right? This is how much liquidity is going into the markets versus, say, being parked at the Fed. All right, so over, the blue area is basically the liquidity in the system. And if you look closely, you'll see that we have these little risk on and risk off diamonds over here. Okay, so that tells us right now we're still risk off technically, but because the liquidity is bumping up, we may get a risk on going into next week, which makes sense because our view is that we would probably see an overall move up into the midterms. But one thing about the liquidity in the markets is that you can basically take a measure of what's fair value, meaning like where would the actual value of the SPX be in relation to how much of this liquidity is sloshing around in the system. And so that's what this measurement down here is telling us. And I just circled the previous couple of times that we got down to this getting oversold level that I've marked off here, and you can see where that has a major bottoming effect on price. And in fact, we look at a couple other things too in our VIP room and in the newsletter, but essentially what we saw was things as far as technicals under the hood were firming up and making it look a lot like what we saw at the beginning of July here. And that's why we think we're poised for a larger move up. Not only is it technically setting up, but also seasonally setting up as we get typically a move into the midterms that's pretty bullish, especially about a week before. But we think this can carry through and be very similar to what we saw in this area going on up. So the question will just be, how high do we get? And could be 3,900, could be 4,000. We just kind of look to see what the indicators are telling us that, hey, it's probably likely topped out, like we got on our signals the last two tops. So that's what we'll wait for. We're not trying to predict an exact level, but rather just wait for those metrics to tell us. And of course, if we think things are going to be rolling over, we're going to be talking about that in the coming weeks. So that's why when we saw this move come down to this 3,500 area, we did say that was a possible. If 3,600 didn't hold, 3,500 was the next level. And the reason why we were looking at that level was not only were we getting oversold on this metric, but if we pop over to another chart here, this is going to show us. All right, this is basically where a lot of the gamma is built up at these different strikes. So this is for the SPY, right? The SPY ETF, which tracks the SPX. The chart we just showed you was the SPX itself, the index, but SPY is the ETF for that SPX index. And so you can see 350 or basically 3,500 is how that translates for the SPX. You can see a lot of open interest on this strike. There's also a lot of open interest at 340 or roughly 3,400 SPX. We think eventually we'll get back down there, but that's for later probably. We went right back to 360 today. That's a big magnet, and our current upside magnet is 370 or about 3,700 plus on SPX. So this is most likely where we're going to see this move follow through, and then probably then some. And this shifts around, but this is the stuff that we look at, these metrics that are under the hood basically, and we cover that in that newsletter that we send out Monday through Friday. So this is another reason why we thought that 3,500 level had a really good chance of holding, since we had just broke down there really quickly. And then the other thing that you want to be cognizant of is the 200 weekly moving average. So whenever you break through a level, and I'm going to bring up this next chart, whenever you break through a level like that and quickly pop back over it, that's a bear trap, meaning that everybody's got liquidity under here, under that, where that bear trap is noted there on the chart. And what happens is all of your stops get ran there, but really what's happening is the institutional guys are filling up their bags down there because everybody's selling into them. And so they kind of engineer these moves to get very large positions filled. And so they're not doing it for a 1 or 2 day move. They're doing it for a multi-week move. So we generally agree with this chart. This is just kind of a forecasted chart as far as the overall market structure, but we could see something similar. Do we get to 4,000? That we don't know for sure, but this structure should play out in a similar fashion, whether we get to 3,900 or 3,850, however that plays out. It really will depend, I think, on the speed of this move that goes up, because I think it's more of a timing thing for this move up, where we're looking at probably going up into midterms versus a specific level. And then, like I said, we have our technical indicators that kind of tell us when it's probably time to step aside and this thing's going to roll over. So I think, Bob, for charts, we did the liquidity, we did the bear trap, we showed them the options. Yeah, so I think we covered chart-wise. I think we're covered.
Yeah, and the only thing I want to make on this is that one of the things that Phil does in the newsletter is that you see those orange lines there. Those are called put walls or call walls, and that was the biggest wall, okay, at 3,500. And what happens with these walls are that once you start penetrating down into those numbers, is that number one, traders have hit targets and they're going to take profit. Number two is spread traders are now losing money when you start going below there, so they're going to start covering as well. And so they create basically rocket fuel for the reversal, because how options work is that if I go ahead and I buy a put, somebody is selling me a put, and a lot of times they're creating it out of thin air, okay? And what they have to do then is they buy a futures contract short to protect their position. And so they tend to drive alongside you. And then what happens then is that when I decide, well, I'm done with that put, they buy an option, they buy a futures contract. So in these situations, all of a sudden, all these people who were buying puts were done. Now they're buying their positions back, and they're buying long positions in the futures, and it creates these slingshot effects. And that's what happened here. We can see that. We could see where the put wall is. We could see what's called the call wall. And if you go back to the chart that Phil showed you about the descending triangle, there is that's up by a call wall. Okay, that's coming up around 4,100. Not saying we're going to get there, but it's kind of interesting. It's not coincidental that you have a downtrend line coming to intersect a call wall, because big money can read and they can do math and geometry too, and so they know that they're safe probably selling up in there, and so we're by no means done. If you look at this chart here that's up here, this is going to be potentially the fourth bear market rally. I think there's between 5 and 7, in a bear market situation. Now run into that, and if we break back down and put this low in again, that low will break down. but that's a 2023 problem or a late 2022 problem after the midterms. And the other thing too is that the probabilities told us basically from October 15th on, midterm election year, you're going to get a relief rally. And man, they just queued this thing up like it was Saturday morning cartoons. It was right on schedule.
Yep, I agree. All right, so with that being said, let's segue into some of our CPI related charts. So today, obviously this whole month, really, as we started this month off, led up to this big CPI reading. They've been our most volatile days. And the only other thing we really have coming up after this will be our OPEX, which is on the 21st, so next Friday. So we can expect this move to run into that. But really, we want to circle back to CPI because this is where, everything's been reacting off of this number, right? And so here we have basically two lines on this chart. For those of you guys that are just listening, we have one line, blue line, showing the actual CPI year over year. Then we have another line, which is the leading indicator for CPI. So this is like year over year house prices, year over year commodities, and a few other things. And it's pointing straight down, meaning that we could be seeing peak inflation. And I know everyone's shy about calling that out, but this graph is pretty good about leading the move down. So the gold line leading the blue line down. Gold line's going straight back down, whereas the blue line's going straight up. So these divergences are where we typically will see. Now you can see like in 2004, 2005, we got that type of divergence, and it took a little while, but CPI did, once we got that divergence, and I would say we're very similar here if you look at that, where it topped out. So we're very close probably to peak inflation according to this chart, and rolling over potentially over the next couple, 3 months.
Yeah, I mean, look, that's you look for divergencies. Thing about in trading is that we look for divergences all the time. And when something is not lining up with something else, if it tends to be a leading kind of an indicator, should get your attention. And so this was just another data point that we saw that says, hey, the narrative is going to change on CPI likely after the midterm election. And I think the data, the next couple charts we're going to show you are going to prove that out.
Yeah, and I misspoke. It's more like 2005, 2006 on this chart. But the point being is that you get that sharp drop on the orange, and then the blue follows suit in a few months. Okay, so the next chart we want to look at is going to be, I believe, rents. Yes, let's take a look at rents.
Yeah, so this rent thing is very interesting because in September, the surprise for CPI wasn't so much that core and was up and other things were up, is that rent was sticky high. And I think now we're starting to see that starting to roll over. And rents typically follow with a lag housing sales and housing prices. And so I think we're getting there was another chart that I didn't bring over to show you guys that are indicating the same thing. It's the first month over month rollover of average rent prices in the country. So we're starting to see it, from a sample of ones and twos out there. We're talking to people that are actually lowering rents for new tenants. So you may not see it with the institutional guys because they're loath to give back something because they have to give it back en masse. They'll try to hide it with different incentives, but for individual investors or homeowners with a rental property, is that you'll find them more flexible. Especially if you're willing to give and take on a few things, you're going to start seeing prices come down. Again, once people start seeing that housing sales collapsing, rents coming down, we don't have a chart for this, but oil's up only 4% year over year. 4% year over year. It's down 41% from March. So, oil's not the boogeyman at this point that they make it out to be. And food's volatile. We're talking in the room. I stay away from packaged goods, so I don't know if that's driving a lot of the inflation for food. But, you get fruits and vegetables and meats and things of that nature, they're pretty comparable from prices a year ago. So I think the whole narrative is gonna flip on CPI going forward.
Right. So this is kind of like this U.S. rent is kind of ties into that orange leading line that we saw on the previous chart, right? The year over year housing costs are coming down as far as rent anyway. Okay. The next thing we're going to take a look at is this ISM versus CPI chart. So tell us about this one, Bobby.
Yeah, it's the prices paid index is also diverging away from the inflation rate. So, and usually there's no lag with this. So I think this is just the vagaries of the CPI BLS numerology, if you will. You know, they probably need new chicken wings and chicken bones for their voodoo doll, but this is telling you that manufacturing isn't causing the issue; it's on the services side, and so this is huge, though, because manufacturing are a lot of times bigger ticket items too. So now, just another data point saying, hey, prices are coming down.
Yep. Okay. So yeah, similar to that leading inflation chart, these two tie right into that. So you guys can kind of see, there's some synchronicity here with all that data. All right. Then the next one, Bob, I think we had was the health insurance. You wanted to go over that real quick too.
Yeah, so I stole this chart off of Twitter, which is interesting to me because I didn't expect this to be a right answer. So I'll be interested to see if it plays out next month. Because of all the spending they did for the pandemic, it created an artificial bubble for the look back period, and that's going to start rolling off after this next month. And we should see, as it pertains to the CPI component, this should be a good guy for a deflationary response. So it's basically going to contribute more to deflation than inflation on a go-forward basis over the next 12 months. And that was the whole purpose I wanted to put it up there so I wouldn't forget to talk about that. So you got the four horsemen, right, of economic collapse, right? Food, energy, rent, and healthcare. You got three of the four that are falling and diverging, and you got one that's slightly positive. And so as this winds through their smoothing process or whatever else garbage they do to manipulate the data, we're going to see these CPI prints, PPI prints continue to fall until we get down to some pretty low numbers, and you're going to see them doing full-on QE again.
I agree with you. All right. Well, I think that does it as far as the charts we had prepped for this podcast. So basically what we wanted you guys to just realize is that we're at or near peak inflation, and that we're at a point now where we are probably looking at a sustained move over the course of the next couple, 3 weeks up. And so that's kind of our position at the moment. Bob, do you have any parting words?
No, it's I think as our title says here, there was a nuclear explosion in the market. If you were fast, you won both ways, okay? But these moves were pretty incredible. Down 3.5% in 1 minute, up 4.7% in the next 2 hours. That's pretty explosive, and that's indicative of big money coming in. So I'd be surprised if we're not higher going into the end of the month.
I agree. And I think at least for this move, being that we had basically a bullish engulfing on the daily, usually that's a couple days of follow through at least. So what do you think? Probably up through Monday and then some consolidation?
Yeah, so next week's OPEX week, right? So
Friday, yeah.
Typically Friday up, Monday up, right? I think that's probably going to be the case. We'll see. It could be slightly down tomorrow. Who knows? But we're calling for this as a big follow through. But if Monday's up on OPEX week, Tuesday tends to follow. So we could literally see this thing a Thursday, Friday, Monday, Tuesday. Then I could foresee a Wednesday, Thursday downfill to get the late longs, crucified, and then Friday's OPEX typically is a pretty dull day, and then we'll in the following week then we'll continue the trend as my view right now.
Yeah, but I think Friday to Friday there's a good shot of being net green.
I do, and typically OPEX week is a lot more heat than light, so it'll probably stay in a range, and it'll mark it on Monday to high, and Wednesday will probably mark the low, and or Thursday will mark the low. and that's probably how it'll play out.
All right, awesome. And tomorrow is Friday, so do we want to cover some crypto tomorrow?
Yeah, let's cover some crypto tomorrow.
All
Let's
right.
take a look. And I saw some questions come in. People want you to cover a few things, and so put in the comments below what you want to cover. Look, this podcast for you. Phil and I talk about this stuff all day long, so we're already educated. So we want to help you guys, get up to speed on things that you're probably wanting to know some more information on. But Phil has a lot of data points behind him for crypto. He lives it, he trades it, and he's been doing it for a long time. And to plug the Phil for anybody new is Phil's a former Bitcoin miner, but he's a Bitcoin and an altcoin aficionado. He truly, truly, truly believes in the value of what the cryptocurrencies mean for our world, and he puts his money where his mouth is. So he's a good listen, and get your questions. So we're not babbling. We want to answer your questions. So get them in the chat room. I mean, get them in the comment room, and we'll talk about them tomorrow.
Yeah. So if you wanted any like specific tokens that you want us to take a look at tomorrow, just put them in the comment section below, and we'll look at the charts on those live and see what's up.
Yeah, and Phil, maybe you want to do a chart. Basically a chartorama tomorrow or something. Up to you. It's
Yeah,
your
well,
day. So
I think we'll cover the legacy markets, and then our take on that, and then we can segue into that for a few minutes and just go over some requests and whatnot. We'll take a look. Obviously, we'll look at Bitcoin, and because we're we'll get into this a little bit more tomorrow, but we're largely trading with the legacy markets, the SPX, and so on, and probably more closely to Nasdaq. I think tech stocks probably. But anyway, so as those go up, so does the entire crypto space. So we'll talk about kind of more of the seasonality of crypto as we head into Q1 and Q2 of next year as well. So look forward to that tomorrow. All right. Is that it, Bob?
That's it. Thanks, Phil.
Okay. All right, guys. Thanks again for watching. And as always, please hit like and subscribe. That really helps us out. And we'll see you tomorrow. All right. Take care. Bye-bye.
Trade Genius.